All right. All right. We're back again with our next presentation. We have with us Elias from Second Act Financial. And I have to say, we met in person for the first time at Nick Fall this year, and subsequently through the fall, pretty much every other show. And Elias has been talking to me about this presentation for some weeks now, and I'm excited to hear it. I want to know what the senior living industry can learn from Henry Ford. But just in general, Elias, just speaking with you and knowing you over these last few months, this man is one of the most genuine and kind, in an industry that's genuine and kind. This man is at the top of that list. So it's been a pleasure to know you and get to know you this fall. And so I'll do my little housekeeping here, but I just wanted to mention that beforehand. So if you have, everybody can run over to the chat, put your questions in there, your comments in there, have a good conversation in there. If you have specific questions for Elias about his presentation, put it in the Q&A, and then I will turn it over to Steve Moran to do the rest.
Elias, it's been a long time, 2.5 days, 2 days since I've seen you in person. The one thing I have to tell you, the one thing I particularly appreciate about him, I think more than any of the speakers we've had today, is he's got a great hairdo. And so I do appreciate that. They say that God made a few perfect heads and the rest he put hair on. So we're in good company. Dave, I'm not so sure about your head, but anyway,
any minute, any minute.
What's
now.
that?
It's gone gray, so any minute now it'll start falling out.
Yeah. My brother still has most of his hair. I don't know how I happened to get that gene, but both our grandfathers were bald. So anyway, I'm just you're doing something really special in the industry, and I appreciate that. So really looking forward to doing it. Just a reminder, the more chats gives you the more likelihood that you'll win a $100 Amazon gift card. And I dropped the link in so to do your speaker evaluations. And I know you'll be so glad for this to be over, just because it's like, I don't want to hear speaker evaluations ever again. But it's really, really important. It really helps us do a better job. It helps us, create better. So I'm glad you're here. And with that, I am going to turn it over to you. We can hardly wait to hear about Henry Ford and senior living. And Dave and I are going to step off the stage.
Mm-hmm. All right. Well, hello, everybody. I'm Elias Papasavvas, the CEO of Second Act Financial Services. Excited to talk to you today about consumer financing and the history of consumer financing, and how financing helps increase your speed to a sale or increase your sales. I'm going to share my screen here and activate the full screen. And if you have any questions at the end, you'll have my contact info. Dave and Steve can, of course, send you information to get in touch with me. But we're going to talk today about financing, and why is financing an important topic. It's an important topic because my friends over at Rubric, if you know Nate or Evan over at Rubric, a phenomenal organization that engages your prospects from your own website in a very comfortable and peaceful and casual way. Rubric did a survey of prospects that either did not move in yet or were expressing some hesitation about moving in to their partner provider communities. And from that survey, they were surprised to see that 81% of the respondents who chose not to move forward with a move-in decision cited financial concerns or low awareness of costs and how to cover them. And so we have these adult children or seniors that are coming in, and Neil in the previous presentation said you only age once, so you're going through this just one time. So by going through it just one time, you don't really understand what your options are, and then you go from Rubric to the American Seniors Housing Association. A year ago, the American Seniors Housing Association did a consumer survey out there and asked consumers, adult children and seniors, it was a combination survey, It asked them, what is most important to you when you're looking at a senior living community, at a life plan community? This was both for senior living rental and life plan communities. And amazingly so, the prices and financial information was the top item that families look for. And if you look at it, the prospect themselves, 81% of prospects cited that financial information was the most important item that they seek. And the influencers, 75% of influencers cited that as well. So when you look at rubric on one unrelated end of our senior living industry conducting a survey, and you look at the American Seniors Housing Association on the other end conducting a survey, and you have this remarkably consistent number. So how does that relate to our friend Henry Ford? I'm actually a little bit of a nerd. I love senior housing. I've been in senior living since 1999. I was 26 years old when I first jumped in. And there's actually a book on the history of consumer financing. If you think of financing, you know, many of you have a credit card, you may have a car loan, your teenager may be planning for a student loan to pay part of college. All of that really got started between 1903 and 1919. That is how today we use a credit card, car loan, mortgages. That concept of smaller payments over time to purchase something that is of a kind of a higher cost was because of a battle between Henry Ford and General Motors. And in 1903, the first Model T was purchased by a doctor in cash from Henry Ford. And between 1903 and 1918, Henry Ford became, in today's dollars, a billionaire many times over and was selling Model Ts left and right. But what they found was waiting to have the cash kept him from tapping another market that wanted his cars, but they didn't have the cash up front to pay for it. And Henry Ford's philosophy was, well, if you don't have the cash up front, you just have to wait for it. Well, that was Henry Ford. He was a billionaire, he was happy, and he was literally sitting on top of the world. Well, that was until 1919 when General Motors said, well, you know what? If you don't have all the cash up front, you could get the car today and start driving today and enjoy your ice cream while you're driving. And you just pay us with smaller monthly payments over time. But in the meantime, you could have a car and you could have your ice cream and you could eat your ice cream too. And from 1919 until about the late 1990s, General Motors surpassed Ford, became the undisputed leader in automobile manufacturing and automobile sales. The only reason Henry Ford came around and adopted consumer financing was because his executive team was pleading with him that if they didn't adopt consumer financing, they would be dead. And it was about mid-1920s, just the mid-1920s, that he acquiesced and allowed this consumer financing so you could purchase a Ford. But in just that 6-year time span, it was too late to catch up. General Motors overtook him because the vast middle class that had a good paycheck from working every day had latched on to General Motors with smaller monthly payments over time. How does that relate to our industry? Well, from 1903 to 1918, times were pretty good. You had a world war toward the end there. And toward the end of that world war, obviously money was tight. But in 1903, 1906, 1910, times were good. And I liken it to the past 2 years in the senior living industry, where you could sell a home in literally a day, low mortgage rates, and just got everybody to want to buy a house. And Why did that happen? Well, real quick, the money supply, the amount of money in the economy that flooded the economy during that pandemic, the money supply increased by 43.2%. And remarkably, home prices also increased by 42.7%. So you had a 43% increase in the money supply, a 43% increase in home prices, but buyers of homes didn't care because they had a 2.5, 2.75 mortgage rate. And so everybody was in the party. But somebody decided to stop the party. And the guy that decided to stop the party is this guy, Jerome Powell. He said, okay, we got way too much money in the economy. Everybody's going a little too wild with selling their home. And he's like, we got to stop this because it's creating inflation, and inflation is out of control. So Jerome Powell stopped the party. How did he stop the party? With 6%, 7% mortgage rates. He doesn't directly affect mortgage rates, but by raising what's an item called the Fed funds rate, that impacted the mortgage rates in a variety of ways. So we have 6 to 7% mortgage rates now. And what you have is multiple offers are disappearing. You've got inspections and contingencies coming back, and you've got seniors' homes that now are competing against the brand new Toll Brothers, the brand new KB homes. The amount of new home inventory out there in your markets is twice the historical average. So if you're in Phoenix, if you're in Fort Lauderdale, if you're in California, if you're in Colorado, if you're in Pennsylvania, and you look at home sellers like Toll Brothers, they have quick move-ins left and right that they try to attract you with. And that is what our seniors are starting to compete with. Well, why does that matter to all of us in the industry? Why do we care? Well, we care because how quickly our seniors can sell their home impacts the speed to our move-in and speed to conversion, right? Whether you're a life plan community, whether you're a rental community, now you have to clean the home. You have to go back to staging it. You have to make sure that the roof doesn't need to be replaced. We did a bridge loan to a family, and it was because at the last minute, the inspector came back to do just a second inspection on the house. When he did the initial inspection, he decided to come back. And when he came back, he told everybody that before the sale can go through, either a new roof has to be put on the house, or the buyer has to waive the contingency that the roof needs to be replaced and buy it and replace the roof themselves. Well, that put the sale transaction to a grinding halt, kept the senior from moving into his life plan community. Everybody was running around in a panic, and we provided bridge financing to help the seniors make the move. If you look at this map, in today's 6 to 7% mortgage rates, it's starting to put pressure in these markets. 91% of metro areas are now considered high risk in terms of speed to a home sale and the competition of a home sale to the new home builders. So what does that do to our prospect? We have a prospect. They're trying to move mom, or they're trying to move themselves. And they've got cash, they've got a house, they've got stock, they got bonds, they got retirement accounts. That cash is stuck in the home, the stock in the retirement accounts. And they're trying to figure out how to go from point A to point B. We had a family that needed to move their mom into a life plan community, and dad had died in the middle of the application to the life plan community. You want to talk about a powerful, high stress and emotional time. And that's another thing that Neil talked about in the previous presentation, empathy, right? We deal with whether independent living or high acuity, skilled nursing. It doesn't matter. We need to be mindful of the empathy that governs our field. And so the kids were scrambling to get mom in the life plan community before Christmas because they did not want her being widowed and alone at Christmas. Mom was independent. She was a spring chicken. I mean, very healthy, very active. Husband passing away, was nobody expected it. Husband was very active, very healthy, just out of the blue it happened. Well, the house was stuck, and the house had to go through all the will and estate issues that now were involved in, and this perfectly planned move-in that had been planned for a year, all of a sudden got stuck. And that is how a bridge loan can help a senior make the move. You get the money out of your house, you pay for your rental fees, or you pay for your entry fee, and it gives you breathing room and time to take your time selling the home. How does that work? We're going to talk about that in a minute, but the things that are going on in our prospects' heads. This is a life plan wheel, and we call it stuck and unstuck, but it's similar to a rental community, whether they've got stress, whether they have fear about leaving a home they've been in for 40 years. Who's going to liquidate their securities right now with the stock market being under by 20, 30%? If you've got home repairs, 2 years ago, the buyers waived that contingency and said, I got a 2.5% mortgage rate. I will do the home repairs. Just give me your darn house. Well, today at 6.5%, 7% mortgage rates, the buyers are saying, no, you're going to do the home repairs because I've got a 6.5% mortgage rate. So when they say that, the busy adult child is trying to think, how am I going to get all of this done? All of this done. We helped an adult daughter with a home equity line of credit that bridged her mom into a community in Florida. And she called us on a Tuesday. Wednesday morning, we called her to let her know that she's been approved, and within 7 days, we'll be wiring the funds. She was so happy. She said she was going to go out, have a drink, and dance with the dog. That's how happy she was, because she wanted her mom to not have to take care of a 6,000 square foot house anymore, now that all the kids were out of the house, and she wanted her to have a life. And that's what our communities provide. Our communities provide a wonderful way to live in that part of our life, not merely exist. And what gets in the way is money. And Second Act Financial Services does provide home equity lines of credit and unsecured lines of credit to help seniors make the move. How does that work? We talk about bridge financing. We think about a car loan. What is a car loan? You're looking at a $60,000 car, and instead of writing a check for $60,000, you write a check for $400, $600 a month, and you enjoy your car now and you pay for it over time. Same concept in senior living. If your prospect is moving into a rental community, and that is the community you run, same concept applies to a life plan community. A lot of adult children, especially now, there's a lot of layoffs in the tech sector. Money's getting tight. We have a family member that used to make me muffins every weekend, and every Saturday she would drop by with the muffins, and I loved her muffins. She has stopped making me muffins. And when I asked her why, she said, because the cost of eggs and zucchinis is too high, and it's no longer justifiable to make those muffins. So when you're looking at a 68-year-old woman who just placed her aunt, 89-year-old aunt, in a senior living community that has stopped making muffins because zucchini prices and egg prices have increased. And now we're asking her to write a $24,000 check over 6 months while she's scrambling to fix her aunt's house. How is she going to write that check if she's concerned about a $3 increase in the cost of a dozen eggs? If she's concerned about $3, how is she going to be okay just without at all worrying about it, writing $4,000, $8,000, and $12,000 checks? She knows that the home sale will pay for Aunt Mary's senior living. But in the meantime, what do? And that is where a line of credit, bridge financing can come in handy. That's generally the concept. I won't bore you with the details. Now, we talk about financing. Okay, senior living is working on adopting easy ways to pay. And one of my friends who we cross-refer to each other, Philip is from Mom's House, is going to be talking next. We're talking about giving people financial options and financial solutions. So you have bridge loans, you have the veteran aid and attendance benefit, you have Mom's House, you have helping a senior with their home sale. Those are all part of a suite of financial solutions. And as sales directors in our communities, it is a lot to ask a sales director to do the talking for all of this. But today we've got Welcome Home, we've got Sherpa, we've got Yardi, we've got Vitals, we've got Inquire. And those systems are there to support our sales directors. And if we support our sales directors, if we leverage Rubric on our provider website, if we have a web page on our own provider website that talks about financial solutions, we begin to educate and we begin to warm our prospect to there are ways to pay for it until you could sell your stock, until you could sell your bonds, until you could sell your house. This is a survey from McKinsey & Company, and McKinsey & Company did just a global survey of what happens to your sales if you offer consumer financing. And it found that if you embed consumer financing speak throughout the customer's education and information journey, you could increase sales by 4.9%. Who wouldn't take a 490 basis point increase in occupancy in this environment? But the key, McKinsey & Company said, is you can't spring it to people at the last minute. You have to educate them throughout their journey. If you wait and spring it on them at the last minute, you're going to see 0.1% impact. But if you put it throughout the journey and you educate throughout the journey, you're going to see 4.9% and then some. By the way, over 80% of Mercedes-Benz are purchased through financing, not a check, but through financing. Now, a lot of people ask me, okay, I get it. Smaller monthly payments until mom sells the house. Great. How do I implement this? Well, here's how not to implement it in our industry. This might work for Windows, but in our industry, we're talking empathy, we're talking journey, we're talking research, from research to move in. There's a lot of steps that our prospects go through. So I wouldn't recommend a billboard off the side of the highway. This is actually a billboard off the side of a highway in Cincinnati. I literally pulled to the side of the highway. My wife was in a panic and she said, "What are you doing?" And I said, "I got to take a picture of this sign." And she just put her head in her hands and just shook her head. So if we're not going to do that, what do we do? On the right-hand side of the screen is the Container Store. And the other couple months ago, I'm buying a house. We're looking at doing a closet. So we were walking through the Container Store. My wife sees me taking pictures again. And she's like, "What are you doing? What are you taking pictures of?" And I said, "I'm taking pictures of the financing signs throughout the store." And she said, "I thought you were taking pictures of the closets." I said, No. You focus on the closet. I'm focused on how do we pay for this. And what was interesting is they had a financing brochure at the checkout, but they also had information on financing at the design desk. And they had information on financing throughout the store on various shelves. Because what the executives at the Container Store tell me is different consumers process things differently. And so they have to hit the mind of the consumer from different directions in subtle ways, not overbearingly. It's got to be part of the symphony of communication, the orchestra, so to speak. So we have our web, and our web has a downloadable guide about our living options. It should also talk about financial options. There should be a page in there about financial options, whether you use us or somebody else. On your website, there should be a financial resources page. I know I mentioned Rubric a few times. Rubric did not pay me to mention their name. It's just a group and a philosophy that I love. And so when someone engages with a Rubric inquiry and they express concern about how to pay for senior living, you can activate a nurture campaign that provides information on different ways to pay for it. After our folks visit and tour our community, there could be a workflow that John Lauricia at Welcome Home and all of my friends at Sherpa and at Inquire can activate in a 15-minute session with you and us that follows up and shows an email template that educates the consumer about financial options. You can insert your greeting, your personal greeting, your personal goodbye, but the center of the email discusses financial options, has the flyer attached, and your CRM can do that automatically. Or if you want to control the greeting and make it incredibly unique because they toured the day before, the CRM can pop it up as a task and you could push send. And then in the community, for those that are more paper driven, the tabletop makes folks aware. You have a flyer that you can put in their folder. You can put a little sentence on the price sheet. The point here is don't spring it to a consumer at the last minute. Spring financial solutions to a consumer in little nurture steps throughout the journey of your prospect. Now, the buy now, pay later, move in now, pay later, moving now, make smaller monthly payments. Interestingly, the cost of the financing is often less than many of the incentives that we provide. So you may see, like you saw in Window World, or you may see Mercedes-Benz buying Mercedes-Benz now at 0% financing. That 0% financing isn't necessarily true. The service provider is covering the cost of that financing, but it's embedded into the cost of doing business because they can see that it can provide an increase in move-ins and an increase in the speed to move in. So as you're looking for a partner lender to provide financial solutions, one of the biggest questions you need to make sure you answer is, are they a federal savings bank that is FDIC insured and OCC regulated? Because that gives you compliance peace of mind. A federal savings bank is regulated 6 ways to Sunday. Shameless plug here, Second Act is a division of Liberty Savings Bank, a family-owned bank out of Ohio, and we are focused on just helping seniors. Do they have senior living veterans that understand that empathy that Neil talked about earlier? That's important because I remember my mother-in-law getting a mortgage, and she was talking about how rude the mortgage lender was. And I realized he wasn't rude, he just lacked empathy. So these are questions that you should be asking. As I wrap up, I see Steve here wants to have me stop talking. We're at 25 minutes. I went a mile a minute on the concept. Obviously, we could hold your hand on how to implement something like this. If you don't use us and you use somebody else, I hope this step-by-step and the why was helpful. So back to you, Dave and Steve.
No, thank you, Elias. That was great. And again, that's that, that statistic on how long, how that conversion rate goes way down when you spring people the last second. But I love the analogy of, for the rest of you, Henry Ford being a billionaire can't really relate to, how the affordability of this move, and none of the rest of this happens. Everything else we've ever talked about today when we hit these barriers. So this is an incredibly important barrier to remove for the majority of Americans. So thank you for that. I want to be brief, but yeah, that was very well thought out and very well researched. Thank you.
Yeah, ultimately, payment is the thing that is the hardest part to get around. Nobody wants to talk about money. And what I particularly like about what you've done is you've created great tools to help people do this. And you know, and we're a big fan of multiple ways of doing this. I mean, it's great if you can go out and sell your money, sell your house and immediately, and you don't need that, or you've got millions in the bank, or you've got Henry Ford's successors as your relatives who can write that check without thinking about it. But I think that I think that talking about money up front is actually a really good thing. I think we tend to not do that. I know that in our little business, as we talk with our sponsors, we used to not want to talk about money, but we start right away because it helps you know what you have to do to find solutions. And we are all about creating solutions, right? So what a great way to do. Elias, thank you very much. I'm going to turn yours off and pop mine up. So don't forget to go in and do your speaker evaluation again. You can type in your browser talk.ace/senior living. Pretty easy to do. You can use the barcode on your mobile device. And Dave?
And so in about 4 minutes here, we have the perfect complement, I think, to Elias's presentation, which is Philip from Mom's House. So I think these two guys are perfect back to back in this solution of removing that barrier. But again, just like we talked about earlier, with getting the medical information on your website as a thought leader, getting the financial information on your website as a thought leader, it doesn't have to be company specific, but make sure you're having that conversation as people learn about you, so you don't spring it on them. So I love that. Perfect.
Yeah, and if I could add, we're big fans of Ben and Philip over at Mom's House, and a lot of people ask me, and they think we're competitors, and I smile and I say, no, we're complementary. You know, Mom's House is there if you want to sell the house in a day because you just don't want the bandwidth to deal with it. If you want to deal with it, we provide a bridge, but if you don't want the bandwidth to deal with it, Mom's House can take it off your plate in a day. And to me, it's about choices.
Right.
Make our prospects aware of their choices and make sure they have the opportunity to make a decision for themselves. But as Neil said, and I'll end with this, they're going through this once, so they don't know what they don't know. It's incumbent upon us to educate them. So I'm excited that Philip is up next.
Yep, me too. And so speaking of that, we'll be back in about 3 minutes with Philip from Mom's House. So thank you, Elias. It's great as always. We'll see you probably in May at Argentum. And until then, great. We'll be back in a minute, guys.
Thank you.
Thanks so much.